Hello traders, it's Samurai Trader here. Welcome to this recap session. In today's session I'm going to be covering questions from members, some tips and some ideas on how to trade the futures, forex and stock markets. Now I'll probably do this over 2 or 3 videos because I've got a ton of questions from students to go through and some things I want to share with you on the charts. As always, if you haven't already done so, please read the risk disclaimer as required by the CFTC, and if you haven't read that one before, if you're new to as a new student, please put it on hold and read it. And next thing is to go to full screen because we will be looking at some charts in a moment. So if you go down to the bottom right hand corner, you'll be able to go to full screen. So moving right along, one common question I have on a regular basis is how many screens do I realistically require? Well, what we can see on this little picture I got off the internet, we've got someone here that's really in overkill mode. With the professional traders, the prop traders I'm working with, I've seen one prop trader with 8 screens, and quite frankly his focus is really on 2. I have 6 screens set up. My focus is on 2. The more screens that you have, the more distracted you're going to be, unless you're more perhaps of a swing trader, or if you are a day trader and you don't have a lot of setups come up. For an example, if you're trading stocks, you may find that you might have 6 or 8 or even more stocks set up because you're waiting for the setup on your screens, that is, because you're waiting for the actual trade signals to appear. If you're a day trader of futures, you may only need a couple of screens, one for execution, and you might have maybe an anchor chart up, etc., but you don't need a lot of screens, and particularly for new traders, less is best. So Simon, I hope that answers your question, but as a maximum I would really say in this particular case, Simon's about to go and buy a new PC and some screens. Look, I'd perhaps set up for 4 screens as a maximum. I think that is absolutely plenty, because I know you're also trading for futures, so in my opinion that's all you really need. Now the next question I have from Michael is this: my daily goal is 1,000 a day trading ES, the futures markets, that is NQ and oil CL futures. So what is the best way to achieve this? And so look traders, it comes down to, first of all, what is a realistic goal per day per contract? And I think we've got to really drop it down. So in that particular case, he'll be trading multiple contracts. My goal, as many of you have seen me, I average between 300 and 500 a day per contract quite comfortably. Now when I say quite comfortable, let me just put a disclaimer on this, okay? That's over an hour and a half, 2 hours. Look, sometimes I do better, some days I do less. It really depends on how much market flow, that is, what sort of volume I've got going through. And let me say this: on really fast moving days, I will usually sit the market out or wait until it slows down. Some traders love trading really fast markets, scalpers. Traders, I love trading the 133 tick on the NQ. I like trading, now I love trading the 1000 volume on ES, but where it is tradable. And we've seen some days, particularly over the last few weeks, where we've seen 3 to 4 million contracts trade in a day, and I'm just not comfortable trading at that speed. Now yes, we can lift the time frame up from say 1000 volume up to 1500 up to 2000, but sometimes it just really pays you to sit aside, because you've got another issue, and that is actually getting your orders filled. If you're using a limit order, of course quite often it runs away from us, or a market order, you're getting slippage. These are all considerations. However, realistically, that's, crazy market days are only on average 1 in 15, 1 in 20. Yes, we'll have crazy times around major red flag news announcements. However, we already know that, and we're sitting those time periods out. So here I'm talking about a normal trading day. So there are three key elements. First of all, the account size and risk. You hear me talk about on a regular basis the maximum risk factor per trade should be 2%, absolute maximum. Now that's in total open positions in a trade. Remember, traders, the lower the risk, the lower the stress. I want you to say that to yourself: the lower the risk, the lower the stress. 0.5 is ideal. 0.5% of your account size is ideal. The next thing is, in achieving $1,000 a day, it really comes down to the market you're going to trade. Now we already know here that we're having traded is trading futures, but if you look at the FX, Forex, stock market, you want a market with a trading range. You know, there are some traders that are really good at trading tight channels, tight trading ranges. That's not me. I need a range. I need the market to be moving, which is really important for me. And of course, in FX, Forex, and in some of the good stock markets, we've got that basically every day. We've got some great markets here where we get great trading ranges 99 out of 100 days. The next thing is your strategy. Now this covers a whole lot of questions that I have come up on a regular basis. Which is the very best strategy to trade, and what's the best way to maximize my returns? So if we look at Michael's goal of $1,000 a day here, if we look at a maximum risk of 2%, and if we're looking there at 3 trades a day, so if we go and take say a T20 trade, so let me take you back one moment. I'm jumping ahead a little bit here. So we want to see, first of all, I want to see a trend confirmed. Now the T20 traders will confirm a new trend. So once you've got that confirmed, we're there. Then either, if you don't trade the T20 within itself, you then want to wait for the first pullback, which will be then a trend trade, which will be either a T1, a T2, T25, a 34B, or an 89B. Now the 89 is usually much later in the trend. Okay, now for those that are looking at this for the first time, by the way, and the new traders, really you're really concerned about the T1s and the T2s. Okay, so you don't have to worry about all these different trade codes, because you're going to be focusing on only a couple of or a handful of trades anyway. If a T20 confirms a new trend, then you're going to look for a couple of trade setups. Now for $200 a day, if you look at the ES, that's 3 6-tick trades a day, 1.5 points. Now before brokerage, that's $225. Take off, say, commissions of $15 brokerage, that brings you $210. On the NQ, that's 3 15-tick trades a day. Take away your commission of $15, that's $210. You'll romp that in if you're taking trades after a T20, because you're in a trend or in a new trend. Now we're going to go and have a look at the charts in a moment, traders, but here's what I want to say on this, is that on the ES 1000, and as we're about to look at the Globex market, the 233 ES, you can trade the T20s in their own right, day in, day out. They're fantastic, profitable trades. On the NQ, quite often you want to wait for your first pullback. So therefore the T20 confirms a new trend, you then wait for your first retracement or pullback, then you start trading it. Okay, but as with always, whether you're trading stocks, futures, or Forex, the strategies you go and apply, because you'll find that they all have their own personalities. So realistically, 3 6-tick trades a day by 5 contracts. So if we're looking at a 2% risk, as you know, we work on a minimum of 1-to-1, so that means a 6-tick risk on the ES is $75 plus your commissions. You want to build that in, that's $80. So therefore you need to be allowing $4,000 per contract, or to achieve 1,000 you realistically should have 16,000 in your account. Now I'm sorry if I'm losing you. All of this is explained in your course notes, but it's very, very important that you are a low risk trader. High risk traders come and go every day, they don't last. Remember, this is a career you're building, so it's very, very important. So in this particular model, you want to be allowing at least $4,000 per contract. One more thing, and I hope I don't lose you here, remembering virtually every broker, if you're trading the Globex market, that is the after hours market on futures contracts, they want the full margin put up. In other words, per futures contract, you're going to need to put up with most brokers around $4,500 per contract. But on that point, $200 a day per contract, that's $1,000 a week per contract. That's 25% per week on your money. Now if you then, let's just take a backward step again, that is 3 6-tick trades a day. So traders, if you were to ask me what to really focus on entering new trends, and this is a realistic goal for traders. Now remembering, before you go live, and this is another thing I want to really reinforce traders, is before you go live, the simulator. When I say in the training notes 100 trades on the simulator, it doesn't have to be 100 winning trades in a row. But what it's going to be is 100 trades whereby you followed the rules without breaking them, because the biggest, or the most, I suppose the largest amount of feedback I have is lack of discipline. I broke my trading rules again. I broke my trading rules. And you hear me talk about this regularly. You have to lift your standards. You have to lift your standards. It's just so important. So we're going to do some more training sessions on this because it's just really so important. Now the other thing too is, some of you have made comments about this, and I've got this on my desk in front of me. Now I trade a combination of setups: trend following, trend continuation, and reversal strategies, counter trend strategies. As traders, until you are consistently profitable, and I know I say this every session, do not trade counter trend until you are profitable, or you've come to me as a profitable counter trend trader. That is really important. Now before we go to the charts, if anyone's watching this that's not already a student, or as I now call you, a member, please go to my website, and for $197 you'll get the entire program. So let's go and have a look now at some charts. There's some really important things I want to bring up. Now first of all, I think I've mentioned this in a number of videos, but let me say this again because it's come up in 3 emails this week, is what are the best time frames to trade on some of the futures markets? Well, on the ES, I've really fallen in love with the 1000 volume. Now it's tradable 80% of the time. That is speed. It's tradable, but sometimes it just runs away, and I just sit on the sidelines. It's not my cup of tea. Okay, I need a market I can trade pretty quickly, but sometimes even the 1000 goes crazy. So but most times 1000 volume. During the Globex market, for an example, what we're looking at the screen right now, what we've got up there is yesterday's action on the 233 volume. Now this is when New York and Chicago markets are closed. This then, if the markets are closed, I think it's an hour, then away we go. There are some fantastic trading opportunities trading the Globex market. There really is, particularly for my USA friends. You get home from work, you can trade this, and as we get along further in the evening towards the end of my day, which is the London session, 5 p.m. my time, there's some fantastic volume flowing through. In actual fact, last night at times you really needed at least the 500 volume because it was really moving along very nicely. And give you an idea, as of now, the markets have been reopened for nearly 3 hours. There's been 42,000 contracts trade in today's action. Now on the black gold, on the oil, I really like the 350 volume. On the NQ, 133 tick. You can use volume. If you look at tick and volume besides each other, they look very similar. On the Forex markets, I love the 5 range, but once again it depends on the market, and sometimes 5 range is just too fast. You need to go up to an 8. If you want to be more of a swing trader, the 13 range works really well. Now also on the 233 volume on the ES, you get some fantastic T20 trades, as I'm about to show you during the Globex session. And as I mentioned, on the ES 1000, the T20 is a straight trading opportunity on its own. Go and do your stats on a daily basis and you'll see what I mean. Now a point I want to bring up here on this one, which came up in an email, whoops, let me just get this back, okay, is that what would I do here? So the market's reopened. Well, remember, when you're above the 200 and your 89's above the 200, you're looking for longs. However, this also can be very dicey because it's almost choppy. You've got really a tight trading range here. So wait for a T2, a T10, or a T25. In other words, wait for a breakout. So you've got a little T25 right there, or even here you had a T1, a T25. You've got multiple trading signals here. So where you get into these, if you had to recognize this, that is to stay above the 200, you had trades firing off. You had 3 of them, very nice ones. However, sometimes that can be difficult, and remembering you're jumping down from a 1000 volume down to a 233 when the market closes. Now I want to just mention the T20s. Now the T20s work really beautifully on the Globex on the ES. So this is really for my US friends, is that you get home from work, there are some really nice T20 trades, standalone T20s. I love the T20s after hours. Here, this is just, by the way, a 34 bounce I took yesterday, and I scalped just 5 on 4 ticks and 5 on 6. Still experimenting with the scalping concept. As you can see, though, if I had gone for my 6 on all, I would have been much better off. But anyway, that was a combination of a T1, a 34 bounce, and 89 bounce. And remembering, traders, when you get the 89 bounces, particularly the first 89 bounce in a new trend, where is your first lower pivot? Because it's a great target. Just mark them up and you'll see what I mean. So where you get your first pullback to an 89, target your lower pivot. Now let's just scroll along here a little further. Okay, and here's another example. So you pull back to your 89, there is your target up here. Now another thing I wanted to bring up, which really come up as a question, is account size. Okay, where if you've got in this particular, and I can't remember, and I apologize who it come from, where they've only got a $5,000 futures account, and they're concerned, or they're really nervous about suffering some losses and really hoeing into that account. Well, number one, you shouldn't be trading until you build that confidence level. But I don't trade the SPY. Now, by the way, in Australia we have the SPY futures contract. So for my Australian and Southeast Asian friends, I'm not referring to the Australian SPY contract. I'm talking about the SPY in the US. Now traders, I don't know much about the SPY. However, I believe you can trade and it models actually the ES contract identically. It models absolutely identically, and it's based upon shares, so therefore you can trade 20% of the size of an ES contract with the SPY. Now please go and Google it, look it up, because I've never traded it. But as far as it's got fantastic liquidity, and we're looking at today's price action, I think this is today's, and you can see there, look at this traders, your 89 bounce, you've got 34s, you've got your T18s, you've got look, it looks like a fantastic market. So if you want to trade futures in the US, and perhaps you're a nervous Nelly to begin with, and by the way, please don't take that the wrong way, maybe this is a great alternative for you to start by trading a SPY anyway, and to build. because if you can trade 20% of the size and have only 20% of the maximum loss, well, you're losing $15–20 in a losing trade, and you've got a proper account size. Well, that's fantastic, but there is one drawback. Now that is your day trading margins, for the pattern traders. So I don't know how that applies over there. I believe if you're doing more than 4 trades a day, over 5 days or 4 days, the pattern trading margins kick in. So these are things you need to look at, but traders, something for you to consider. So I've got a lot more to cover. This video is nearly 20 minutes in length, so traders, will go to video 2. So I'll see you. Yep, let's wrap this one up, and I'll see you on video 2, where I'll cover some more questions from students.